Greetings. I'm Ken Rogoff. I'm professor of economics at Harvard University. I love Korea. I so wish that I could be with you. I certainly intend to come professionally in the future. And I must say, my family has been arguing that we should all go to Korea. So I hope to visit in that capacity also. I want to thank you for the opportunity to address you today. I want to congratulate the metropolitan city of Seoul, my friends at the Institute for Global Economics and the Shinhan Financial Group for organizing this conference. It's on a very important theme of this session of the way in which the global economy is being reshaped. I believe we're at a turning point in the global economy, the likes of which I haven't seen in my 5-decade professional lifetime. Was it the pandemic that triggered things? It's hard to say. Certainly it changed people. Certainly ordinary people became, in my country, less willing to put things off, wanting to make trips, wanting to go to restaurants, fearing that there would be another pandemic. I have no doubt that it also shaped politics, pushing populism. Even Putin's invasion of the Ukraine, one could almost say, came from his isolation after the global pandemic. Whatever the causes, I think there's little question that the macroeconomic fallout from this is going to be greater uncertainty over the next decade. I'm narrowly going to talk about uncertainty over economic things. So I'm referring to uncertainty about inflation, uncertainty about exchange rates, uncertainty about interest rates. We live in a more volatile world. I don't want to sound like I'm totally dark. I think we lived in an unusually stable world for a period. Maybe not everything was good, but exchange rates were phenomenally stable in the 5 to 10 years running up to the pandemic. Interest rates barely moved. Inflation was zero. It was quite an unusual period. But I think as a result of all these factors that are facing the global economy today, it's not going to be the same. I've spoken about geopolitical tensions. I'm sure you're thinking of it. I can't go off on that, but it's clearly lurking there. It has economic effects. So a small piece of it is U.S. policy and trade, where, of course, President Trump had a very protectionist trade policy compared to his predecessor. And Biden, in many ways, is the most protectionist president we've seen in generations. Not only did he put in, kept all of Trump's tariffs, his Inflation Reduction Act was a very protectionist piece of legislation. You had to buy America. It was supposedly the green economy, but it's very protectionist. He slapped 100% tariff on electric vehicles. And Trump says if he wins, he's not to be outdone. He's putting in big tariffs on his friends, even bigger tariffs on his enemies. Well, that's just a reality of life. And I don't want to overstate it, but I think it's one of the many things leading to uncertainty. So there's domestic policy, populism, and we face, of course, a number of larger questions. Let me focus on something very narrow now, sort of near and dear to what I work on. I'm first going to talk about interest rates. Well, they're obviously very high across the world now compared to what we've gotten used to, the near zero rates that we had. And I think one of the big questions in people's minds that kept saying, is the Fed going to cut once? Are they going to cut twice? I don't think that's the right question. I think, in fact, you need to look more moves ahead. I'm a chess player, and think about the longer term here. And I suspect we live in a new normal that looks a lot more like the old normal, not before the pandemic, but before the global financial crisis, where interest rates at the long end, no matter what policymakers do, are going to stay higher than people have gotten used to. The U.S. Treasury rate, for example, which came down to almost 1.5%, the 10-year Treasury bill now is well over 4. It's been at 5. I think that's going to be the new normal. And it comes from these pressures on central banks. There are upward pressures on interest rates coming from populism, higher defense spending, the green transition, and of course, debt is very high. And I don't want to sound overly dark about this. Of course, we had high interest rates before in periods where we grew better, but I think that's certainly the shape of things to come. Another big change for sure is China, which I think is in trouble. Yes, it's going to be resilient, but I'm not sure we're going to see the kind of fast growth that we'd seen before from China. At the heart of it is they become overbuilt in infrastructure, in real estate, not everywhere, but in large swaths of the economy, particularly in the poorer, smaller, quote unquote, tier 3 cities, as we call them, which still account for a very large part of China, where they built a lot, but the young people are still leaving, prices are falling. Now, that's not something they can't navigate, but let's remember that housing wealth is a very, very large percentage of the Chinese people's wealth because they're not allowed to hold that much else. And so that's putting a lot of downward pressure on China's consumption. And there are other things having to happen going on to their problems with the rest of the world. They're producing actually great electric vehicles, but Europe and the United States is telling them we don't want them. And at the same time, there's various domestic tensions. Let me turn to some financial issues. I've mentioned interest rates, where I think we can have something higher for longer. I'd like to talk about the exchange rate, where the dollar is very, very high. So what I look at is not just the value of the dollar against its trading partners, but taking into account inflation, what do prices look like? And this is an extraordinary time. I don't think I've seen anything like it for more than 20 years. Maybe in 2002, we had the dollar this strong. And if you go before that, I think you have to go to the mid-80s. And both previous times when that happened, the dollar over a year or two came down quite sharply. It fell in value. It's very hard to predict exchange rates, but I think one of the regularities that we have is when the real value of a currency is very far out of line, you can expect it to fall. Okay, on the yen, in that one in particular, really has to strengthen at some point. It's very, very weak. It may go to 180 per dollar before it comes down, comes to a stronger value, but I think it will. And I'd say the same thing of the Korean won. So around this uncertainty, one thing I think that I have stronger views about is what might happen to the exchange rate. Let me turn to thinking about Korea in particular. And I want to tell you something I think you must know, but maybe you don't think about it this way. China right now is mired in the middle income trap. There's no doubt about it. They may have a decade like Japan. They may have much slower growth, but they're not as rich as Japan. They're done very well, but they're still 800 or 900 million people living well below middle income level in China, no matter how you measure it. And yet the economy is slowing very sharply. It's very hard to get over the middle income trap because there are lots of reasons, but basically as people become wealthier, they demand more, they're willing to put up with stuff for a while, not indefinitely, and populism comes up and countries have problems breaking out of this. Korea is really, I think, the only large country that's managed to do this. I mean, of course, Japan and France and Germany grew, but they were wealthy before. That's a whole different matter. There's Singapore and Hong Kong. They're very small countries. Korea is very important. But at the same time, I don't think it's any question that Korea has been running into problems. Of course, foremost among these, and I know you talk about it a lot and are trying to deal with it, is the low rate of births, which maybe are the lowest in all of the OECD right now. But also productivity has been slowing down in Korea. The Korean model has not been working as well. There are reasons having to do with the rise of China for sure, just as it affected Japan. But I wanted to say to you that I think there also lies opportunity in this, because on the one hand, yes, China's moving up the value chain. Yes, at some level, that's a problem for Korea. But China has a lot of problems. So, for example, I know one of the themes of this conference is how can Seoul develop as a financial center? And let me tell you, this is a good time to think about it, because I think Hong Kong is going to fall and fall. It just, very hard to maintain the rule of law, very hard to maintain what it's been able to project to the world as its brief period as an independent country comes to an end. It was, of course, a colony always under the British, and it's sort of becoming one again. The business could go to Singapore, could go to London, could go to New York, maybe even Japan, but it could certainly go to Korea. So it's really a propitious moment to be thinking about this. I would also say that in Korea's business model and in my earlier trips to Korea, it's a point I've stressed in the past, if there were a way to tap into the incredible creativity of the Korean people. I mean, it's not just Oscars for best film. Korea dominates in so many ways. And I think it can in other areas. And don't say you're too small. Israel is small. And maybe, they haven't done as well as Silicon Valley, but it's still quite remarkable. There's no reason that Korea couldn't do that. And also, these geopolitical tensions have made the United States want a friend, sure, and Korea is absolutely a friend. And so there are all these China plus one, you've heard about it, companies wanting to put their business elsewhere. Yes, they're going to Indonesia, India, Malaysia, but they're also looking very hard at Korea. So I think they're in this difficult, complex world that we live in. There are many opportunities. So anyway, I apologize that my remarks were a bit dark, perhaps, but I do think we live in a world of great opportunity, and Korea, having one of the most creative people in the world by every measure, has every opportunity to benefit from that. Thank you very much, and I look forward to seeing you in person on an occasion soon. Thank you.